Good day, and welcome to CCL Products India Limited Q2FY24 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking Limited. Thank you, and over to you, sir.
Thank you, Yusuf. On behalf of Antique Stock Broking, I welcome all the participants to the 2Q FY24 earnings call of CCL Products. From the management, we have Mr. Challa Srishant, Managing Director, Mr. B. Mohan Krishna, Executive Director, Mr. Praveen Jaipuriar, CEO, Mr. V. Lakshmi Narayan, CFO, and Ms. Sridevi Dasari, Company Secretary on the call. Without any delay, I would like to hand over the call to Mr. Jaipuriar for opening remark, post which we will open the floor for Q&A. Thank you, and over to Mr. Jaipuriar.
Yeah, thank you, Manish, for the introduction, and I welcome you all to this call. I'll just go through the brief summary of the operational performance for the last quarter and the half year, and then you can ask your questions. So as far as quarter two performance is concerned, the group has achieved a turnover of rupees 607.56 crores for the second quarter, as compared to rupees 506.56 crores for the corresponding quarter of the previous year, which is almost a 20% growth. And the net profit stands at rupees 60.86 crores as against 57.79 crores for the corresponding quarter of the previous year, which is approximately 5% growth over the corresponding quarter. The EBITDA is at 110.64 crores, which is a 13% increase over the corresponding quarter, and profit before tax is rupees 69.7 crores, which is a 5% decline with respect to the corresponding quarter. As against the half yearly, as far as half yearly figures are concerned, the group has achieved a turnover of rupees 1262.50 crores for the second half. For the first half of, and as far as the growths are concerned, it is 24.3% growth. And as far as net profit is concerned, it stands at 121.57% crores as against rupees 110.53 crores for the corresponding half of the previous year. The EBITDA is at rupees 217.32 crores and profit before taxes 113.13 crores. As far as EBITDA is concerned for the first half, it is 16% growth over corresponding half for the last year. And as I told, the profit before tax for the half year is 139.13 crores. So that is a brief summary. I open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question is from the line of Rakesh Wadhwani from Monarch AIF. Please proceed.
Hi, team. Thank you for the opportunity. So just there was a few days, a month back, there was an update regarding the breakage of equipment in the Vietnam subsidiary. Can you please talk about the loss or the business loss due because of the breakage of the equipment?
So yeah, there was a breakage in the equipment in the last quarter, and for which we had given an intimation. As far as the update is concerned, the equipment and the plant is back in running and everything is fine now. Now, as far as losses are concerned, exact losses we will not be able to comment exactly what is the loss right now, because the losses are being assessed and because we are speaking to the insurance companies. So all that survey and everything is taking place. So once that is done, then we'll be able to intimate about the exact losses for that breakdown. But yes, the production losses we experienced. So for the the expanded capacity, almost half of the total capacity we were not able to operate for 1 full month. So that is the kind of production loss we had, which led to top line as well as bottom line loss. But exact numbers we'll be able to share with you once we have assessed the exact amount of losses.
Okay. And sir, can you talk about the coffee prices for the quarter, like average coffee prices for the quarter?
Average coffee prices for the quarter is a very difficult thing to say, because we as you know, our business model is such that we keep buying for our contracts. So there are a lot of these coffee prices that we may have which had already been bought quite some time ago. For some spot contracts, you would be buying coffee on the spot. So that's not a very probably the right measure for one to see. But as far as the coffee prices globally are concerned, we all know that coffee prices are still at very high levels. We are expecting that once the Vietnam crop comes in, which is approximately the same time next month, we will be able to get an idea that how the world coffee prices are or which direction they are moving in. And that will give us some sense that how the coffee prices are going to pan out for the next 1 year.
Okay. Sir, one last question from my side. Sir, there were articles a couple of weeks back that there's a coffee crop loss in the Brazil market. So just wanted your thoughts on that. Are we witnessing any clients shifting from Brazil to us, or we are getting new queries because of that?
So I think the news that you're referring to was probably 1 year old news. That's the time when Brazil crops were affected and the Brazil coffee prices had gone up. But this year the Brazil crop has been good, and in fact there the prices have softened a bit. So it's not so that phenomena of people moving out from Brazil is not there, and we will, as I view, a lot will depend on how things move once the Vietnam prices come out in the open, which will happen after their crop comes in next month.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. Before we move to the next question, reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Venkat from 3 Sigma Financial. Please proceed.
Thanks for the opportunity. Sir, in the last quarter, you mentioned that, the green coffee price actually determines the liability, the borrowings rather, the working capital. So can you give a breakup of the working capital versus the long-term borrowing?
Long-term borrowings, this is Lakshman here. Long-term borrowings remain intact because we are availing the borrowings for new projects only at Vietnam and in India. As far as the working capital borrowings are concerned, as I stated in a previous call, the limits are assessed based on the peak level of the GP prices. That remains intact. And any moment a change that can be witnessed once the Vietnam crop keep coming in, that is likely to come from December.
Sir, there is a 400 crore increase in the borrowing. So is this due to the price, or is there anything else that has contributed to this increase in borrowing?
Now, increase in borrowing, if you look at it as we assess, if the new project is coming up, that is 16,000 tons capacity in the facility, whereby we are taking around 320 crores is the term loan. And some of the balancing regarding the GC prices impact, there is another 80 to 100 crores. That's what it is reflecting as 400 crores.
Sir, we had a shutdown, right, in Vietnam. So what is the capacity utilization in light of this? The total capacity utilization.
As far as let's say the Vietnam capacity was concerned, we were looking to utilize 50% of the enhanced capacity and almost 100% of the the previous capacity. But considering the breakdown and the situation that arose in Vietnam, probably that number would be lower for the last quarter. But on an annualized basis, we will try and maintain that kind of a guidance of utilizing 50% capacity for the new line for the full year.
So at the company level, what is the capacity utilization, sir?
So as I told you, the capacity utilization per se, if I were to take the India capacity utilization, it is at 100%. Vietnam, the previous line, or let's say the old line capacity utilization is also almost 100%. Quarter one in Vietnam, we had utilized the new facility also 50%. But quarter two, as I was telling you, we are still assessing the losses, the exact production loss that we had. But if I were to take an informed guess, it won't be 50% of the new capacity, but probably will be at around 25-30% of the new capacity. But that will actually, we'll be able to give a clearer picture once we have done our surveys and assessments, and the insurance companies also done the surveys and assessments. But going forward, as I told you, at an aggregate level for the full year, we are trying our best to make sure that for the full year, for the enhanced capacity, we will be able to achieve 50% because we are looking to secure more contracts in quarter 3 and quarter 4 so that we can make up for the losses that we had incurred.
Sir, how do you see the next quarter and the entire year?
So the next, as I told you, exactly the same way as we were mentioning, the next quarter and the entire year, we already had the order books pulled as far as the guidance was concerned, which was about 18-20% growth on top line and EBITDA. That will remain for the thing. The only thing is that for the losses that we incurred last quarter, we probably have to book a little more orders so that we make up for that top line and bottom line losses. So the entire year, the guidance still remains the same. We will probably end up at 18-20% volume growth and similar levels of operational profit growth, which is EBITDA growth.
Great. Thank you very much. I don't have any further questions.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, I request you to please restrict your questions to 2 per participant. Next question is from the line of Richa from Equity Masters. Please proceed.
Thank you for the opportunity, sir. Sir, my question was, if you could share an update on the domestic and branded business performance for the first half. And second question is on margin trajectory. I know that you don't share the absolute margins, but do you see any kind of, improvement or inching up? I think you had guided for that, over 2 to 3 years, you would be looking forward to 135 to 140 per kg kind of margins. So are we on track to achieve that?
Okay, first of all, the first question that you asked was about domestic market performance. So if I were to see the total number, we probably were around 135, 140 crores of total domestic market business, out of which approximately 85-90% was, 85-90 crores was pure brand. So we are on track for the brand to, close at almost 200 crores this year. And the total business would be around 325, round about that number crores for the entire year. So we are growing, doing at quite a healthy pace. But yes, going forward, we also want to kind of, drive some more growth drivers into business. And then making plans for getting into more aggressive growth in the next, not only just the second half, but also subsequent couple of years. That is a little brief on the domestic and the branded business. Now the second question that you asked is about margin improvement. So see, we have given guidance and we have been getting this for last many quarters that there are many things that lead to or that will determine our margins. For example, we are pushing hard for more smaller packs that will help us improve our margins. We'll drive more, specialty coffee sales. So that will help us drive margins. But there are also other factors which probably at an aggregate level also pulls it down. For example, let's say the new capacity that we are putting, the first capacity that we put in Vietnam was the spray dried. Spray dried, we all know that the margin profiles are lower than this freeze dried capacity. So our mix will change.
Sorry to interrupt, sir. Your voice is breaking.
Hello? Can you hear?
Yeah, your voice sounds a little low now.
Is it better now?
Yes, this is better.
Hello? Okay, fine. So yeah, I'll just repeat a little bit of things what I said because the voice was breaking. So I was on the margin question that was asked, that will the margin profiles improve? So what I was telling is that yes, there are certain segments where it will improve. For example, we are driving more small packs that will help to improve the margins. We are trying to sell more specialty coffee that will help improve the margins. But having said so, we'll also see some mix change because we have put the Vietnam capacity, the 16,000 metric tons is spray dried capacity where we earn lesser margins. So what will happen is that this year, suppose if we were to utilize 50% of my capacity, where the growth will come from will largely come from spray dried. So that growth will be driven at lower margins because spray dried will have lower margins. So there will be factors which will be pulling up the margin. There are factors which will pull down the margin. So when we had commented that some of the margins will improve, probably it was for some of the sectional business and not really at an overall group level. Overall group level, we have been the guidance for last few quarters. We have been always saying that for next couple of years we don't see in any improvement or any deterioration in margin. We will maintain the 18-20% volume growth and 18 to 20% EBITDA growth as of now.
Okay. Thank you for that answer. And sir, my second question is that now that you're putting up India capacities and Vietnam capacities are also planned. So how much time do you expect for these capacities to be utilized at an optimum level of full utilization level? How much time does that take?
So, as a thumb rule, if you have tracked our, capacity enhancement and tracked our empirical data and history, you will see that generally what we do, what we have been able to do is in the first year, we tend to utilize 30-35% of the capacity. Second year is 50-60%, and third year we get to 80-85%, which is very close to the maximum capacity because you actually don't get the maximum rated capacity because of the different blends and things that you make in the coffee plant. So therefore, that is the broad guidance we maintain. But if you were to see the Vietnam business, Vietnam capacity expansion, so instead of 30-35% in the first year, in the first year itself, we are able to utilize 50%. So that we are kind of, that we are performing much better. But as far as now the next India capacity is concerned, that's a thumb rule. We will see how things go forward. But we know that there is a lot of capacity which we already know that will be utilized because, for example, the India capacity will be used a lot for domestic market. Domestic market itself is growing at, as of now, 20-25%. We are looking to even kind of push the pedal harder and grow at a higher rate. So we know that capacity will be required. So there will be some capacity utilization. But as a thumb rule, as I told you, this is how we have kind of progressed in the past, and this is how we are looking forward to progress for all the new capacities that we are looking forward to install.
Okay, thank you for the detailed answers. So one last question, if I may. What would be the effective tax rates over next 3 years? Are they likely to be in the same range or some kind of change in effect?
At the group level, it is likely to be around 12%.
Okay. Okay, that's the guidance for next 3 years, like until FY25-26?
The next 3 years, it holds good.
Okay. Okay, thank you so much. Yeah, that's all from me.
Thank you. Next question is from the line of Senthil Manikandan from iThought PMS. Please go ahead.
Good morning, sir. Thanks for the opportunity. So first, in terms of the breakage of equipment at Vietnam, so is it, if you can share some insights into if it has already happened in the past, or is it because of a new supplier that has happened in the expanded capacity? Some insights on what is that?
No, I don't think so. It is because of the new supplier. It has happened once once in the past. And these are things which are part and parcel of any manufacturing processes, that there will be breakdowns. These are not new to us, and yes, of course, it was unexpected, but not really new to us. Having said so, the reason that we had informed the market, because as to comply to the regulations that have been put up by SEBI and other government authorities, that if there is a material impact that the organization feels that will take place because of these breakdowns, one needs to inform. So we were overcautious, and we wanted to be very transparent, and that's the reason we informed the market. But it is neither new, or it is neither because of any new supplier or anything.
Oh, great. Thanks, sir. Second question is with respect to the domestic B2C segment. So in terms of branding, I think we are seeing brands in the local Chennai metros. So what is the broad strategy for the branding part of the B2C segment?
So basically, the strategy is twofold. What we are doing is we are trying to aggressively gain shares from the existing players and the existing categories where we are trying to grow big. We started our operations from South India, which is a big coffee market, and we are now expanding to other cities across the country. So in almost all 10 lakh plus population town, we now have our distribution set up, and we are slowly trying to capture not capture, let's say, but at least gain some market shares in those areas as well. So that's one part of the strategy. The other part is that how do we increase the coffee consumption, for which we are trying to introduce newer formats like premix coffee, which is because India largely, you see, is a tea drinking nation, and slowly people are adopting coffee. So we wanted to make sure that we are able to offer the consumers a lot more choices and a lot more ways to drink coffee. And that is why we are very gung-ho about this category of premixes, because it helps drive that consumption that much more easily. So that's one segment which we are focusing a lot, which is a very new segment. And here we are doing a lot of category driving exercises. Here it's a new category. There aren't many players who are playing in the category. So here we are promoting amongst the youth, the college going guys, the bachelors, who probably are looking to not only experiment with coffee, but also try various varieties of coffee. And that is what we are trying to offer to them. Again, coffee, it's a food product, and food products really have to be driven very differently. You have to drive newer habits. So what we do is we engage in a lot of sampling exercise, interaction of the category with the consumer. So wherever we get a chance, we do a lot of product sampling so that people, interact with the product, they get the taste of the product. So that's the second part of the strategy that we are taking forward. So largely these are the two buckets, in which we are operating.
Great, sir. Thanks. That's it from my side.
Thank you. Next question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Hi, sir. Good morning, and thanks for the opportunity. Sir, a few questions from my side. So first, if you can give some sense in the current quarter, the kind of volume growth and the pricing, either degrowth or the increase on a Y-on-Y basis.
So current quarter, if you see, the volume growth was around 10 to 12%, and we got a value growth of 20%. So current quarter, I'm talking about the quarter gone by, which is quarter 2. So on 10 to 12% volume growth, we got a value growth of 20%, which was largely because of the pricing advantage we got. Largely, if I were to pinpoint one thing, because of small tax, the leverage we got on pricing.
Okay, and volume growth was slightly muted, mainly because of the shutdown at Vietnam.
Yes,
breakdown at Vietnam.
Absolutely. Muted as far as our guidance are concerned. But a 10 to 12% volume growth in this era itself is quite.
No, that is fair enough, but we have been guiding for the
guidance already. Against our guidance, it got muted because of the breakdown at NCL plant.
do we see, sir, that with the excess capacities which we have right now, over next 6 months, we will be able to still achieve 18% plus kind of volume growth guidance, or it will be?
Yes. So we are trying very hard that because of the excess capacity, we have a chance to make up. So we are aggressively pitching and making sure that we make up for the losses. So only time will tell. Whatever losses that is lost in the last quarter, we try and make up to additional volumes. But yeah, that time will tell, because right now we are in the process of pitching and seeing what can we make up.
And sir, how has been the green coffee prices right now? You said that they have started softening, and in next couple of months that Vietnam will be setting up the prices, right?
So when I said softening, it was mostly there was a question asked that is the Brazil prices still very high, and are we getting newer customers from Brazil? To which I said Brazil crops prices have softened because they had a good crop this year. As far as Vietnam prices and Indian prices are concerned, we will get to know next month, because that's when the crop for both these markets come, and that's when you start seeing that what kind of trends will evolve after the new crop comes. So as of now, they tend to be on the higher side itself.
So you think that India and Vietnam will see a price upward revision?
No, I didn't say upward revision. I said that we will see the trend once the new crop comes. So it could be upward, it could be downward. Suppose if the market believes that the supply of crops has been terribly low, there could be an upward trend. But if the other trend happens, then there could be a downward trend as well. So,
but as of now, we don't have much clue about it, whether it will be.
No, we don't. Because all the clues anybody had in this world about coffee prices have got broken in the last 2 years. So all predictions have gone haywire. So really difficult to predict as of now what's happening, because as you know, a lot of fund guys also are playing into it. Farmers are holding stocks. So there are a lot of things that get played into this whole commodity. So it's better to wait and watch and see the trends before rather commenting it speculatively.
So another trend which you just mentioned, that domestic market coffee consumption is increasing by roughly 20 to 22% and even upward. So that's a very positive numbers. If the industry is growing with that number, that's surprising to see, because I don't see that the coffee retailers in India, they are growing with that pace. So from where we are getting this confidence that the growth in the coffee industry is roughly 22%, and how we are.
Okay, I'll correct a little bit of this thing. When I was talking about domestic market growth, it was our growth of 20-25%. If you see the domestic market, there are two segments that operate like any other market. There is an in-home segment and there is an out-of-home segment. Now the in-home segment, which is the a retail segment that you buy coffee and take home and drink coffee, that isn't growing at a very high pace. That is still very low, at around 10% or so. Yeah. So that is not growing very high. The growth that is coming is in the out-of-home segment. So what is happening is that there is a lot of coffee consumption that is happening out of home, whether it is cafes or at places of work. Because what has also happened is now that after COVID, everybody is back to their places where a lot of out-of-home consumption happens. That's a segment that is growing very fast. Yeah. So, but if you see our play, either internationally or in domestic market, as of now is largely in home segment. So the in-home segment category growth isn't very high, but what we believe is that for us, because we are aggressively trying to gain market share, we will probably be able to grow at a much, much higher pace than what the category of the market is growing.
Okay, so you were saying that 20-22% in your context, not the industry.
In our context, yeah.
Okay. And sir, in retail brand sale, you're targeting roughly 200 crore kind of sales for the FY24. Over next, at pure brand sale only. So what is this number you are looking over next 3 to 4 years? Also, you are proposing the restructuring with the merger of the retail business with that context. And if you can throw some more light that how you see the retail business going forward in next 3 to 4 years. And sir, one more thing, that last con call you mentioned that you have global ambitions as well to grow your coffee retailing business globally. So any strategy formed up there that how much spending we are planning to in terms of our retailing increasing to global markets, how much spend we are planning to over next 2 to 3 years?
So that's a long one, but yeah, I'll just try and keep it crisp and simple. In the domestic market, in the next 3-4 years, we are looking to drive aggressive growth anywhere between 25 to 35%, which means that probably in every 3 years, at least for the first 3 years, we would like to double it from here where you are. So that's the kind of ambition we have, and that is what we are aiming for, and doing whatever it takes to get to that level. So that is what is about the domestic market. As far as international, yes, we have ambition to launch our brands, especially considering that now that the brand has got some equity in India, we are already getting a lot of queries from markets where Indian diaspora is residing, that can we have Continental Coffee here also. In fact, even if we haven't started anything right now, we see lots of instances where our coffee has been imported by some local traders and started selling in the local markets. So that phenomenon started. So we felt that it is better that we take it up in a more organized fashion. So that's one segment, and of course the other segment is like UK market, where we bought a brand from Logworks, which is Percol and Rocket Fuel. So we also want to take that forward and create these segments where you could start seeing 50 to 100 crores of sales in 3-4 pockets across the globe. Now, as far as what is that we are going to spend, see, we just like domestic market, where we have built it step by step and stone by stone. That is how we are trying to do in other markets also. So our strategy won't be to kind of blast a lot of money in the market and create a lot of hype and then try to get sales. But it will be a step by step sales, which means that probably in any market that we operate, in the first couple of years, or let's say by the third year, we would like to break even. And even in the first couple of years, we would not like to lose more than a couple of crores in trying to build the brand. So that is our philosophy, and that is how we will take it forward in each of these markets.
So just last bit from my side, and I'll come.
Sorry to interrupt, Mr. Gupta. May we please request you to rejoin the queue, as several participants are waiting for their turn.
Okay, no problem. Thank you.
Thank you. Next question is from the line of Jinesh Karia from Antique Stock Broking. Please go ahead.
Yes, thank you for the opportunity. So first question is with regards to the CapEx that we are doing. So any color on how we spend on both India and Vietnam CapEx, and how much of it is funded through debt till date?
India, Vietnam CapEx.
As we stated earlier, the Vietnam expansion is taking place at $15 million USD. Out of that, the $15 million is our contribution, $32 million is the debt component.
Okay, and the India CapEx, 16,000 capacity, that is coming?
India, it was the facility which we are taking up under CCL Food and Beverages, wholly owned subsidiary, which a project outlay of 400 crores. Out of that, the 320 crores is the debt component, 80 crores is our component. It means that there and here it is around 600 crores is the debt component, and the balance amount it is our internal contribution.
And how much cash outflow has been done till date?
We have spent almost around 200 crores.
Combined India and Vietnam both?
Yes, together.
Okay, great. So secondly, if you can just throw some color on how the small pack mix has improved in this quarter compared to the previous few quarters. How is the trend been?
So the trend is improving, and in fact, if you see the standalone numbers, you'll see that the efficiencies have improved, and that is largely because of small pack deliveries. So it is in the positive direction. If I were to give you percentages in the export business, almost in the India business, we were actually, if you remember, a couple of quarters ago, post-COVID, we had the small packs contribution had come down to 17-18%. It has now eased back to slightly above 20%. And as we are going forward, we are kind of constantly pushing more and more small packs. and we are likely to get similar kind of trends going forward as well.
Okay, great. And sir, on the geographical mix, so how much of our export would be to the Middle East market, and how has our US geographical mix improved over the period of time?
So, let's say US currently is at around 12 to 14% of our sales. Middle East is not very much. It will be less than 10%. Middle East and Africa, if I were to combine. So it's less than 10%, close to maybe 5% or so. So that is there. Europe is almost again 15%. Russia and CIS will be around 20-25%, and the balance is Asian markets, including the domestic market.
And just one last question. On the debt that we were guiding last quarter, or the peak debt of around 1,800-2,000 crores. So the coffee prices still remaining at an elevated level, although we are expecting Vietnam price announcement next month. So any change in outlook on that front?
So just a small correction, that 1,800 crores was not the utilization. It was only an approval that we had taken from the board so that we keep our outer limits intact. Utilization, if you see, for the full year will be close to around 1,300-1,400 crores. Yeah.
And that should be the peak for the next
prices. Yeah. Once we get to know the coffee prices trends, it would change a little bit, because the coffee prices go down, then I think we'll see a reduction in that as well.
Okay, that's helpful. I'll fall back in the queue for more questions. Thank you so much.
Thank you.
Thank you. Next question is from the line of Abhilasha Satale from Quantum AMC. Please go ahead.
Yeah, thank you for giving me opportunity. So, sir, just the breakup of the capex, like how much exactly will be incurring in this year, in 25 and 26, if you could just keep those numbers. And secondly, in terms of peak debt, because this year we will be at 1,300 crores, but by the time we complete India capacity, how much will our peak debt stand at? Like what is our target to reach that, and what is our deleveraging roadmap post that?
Indian operations, so the capex, it is somewhere around 400 crores to complete the project, which we are going to incur before March. Thereby, we are going to start the operations as well. This is the Indian operation. So, getting into the Vietnam side, the project is going to be completed, as we stated earlier, in the mid of next financial year. And against the project outlay of around 50 million, we are going to invest around 30 million during this year till March, and balance 20 million we are going to invest into the next financial year. So it means the total capex, it is somewhere around 650 crores is going to be at the group level. 650-700 crores we are going to invest into the capex at both the facilities.
Right. Okay, fine. And the peak debt level, like what would it be like by the time we complete our capex? Because this year we'll reach around 1,300 crores, and in 25, 26?
The 24-25, as you stated, it is around 1,800 crores, and 25-26 onwards we keep reducing this further because the repayments are going to start, and from 25-26 onwards you can see the reduction in the overall debt. So by March 25, we are likely to be somewhere around 1,800 crores, as we stated in our previous call as well.
Sure. Okay, thank you. And so just last one on the Continental Coffee, like how do we see this business as a percentage of revenue or in terms of absolute how do we see this segment of ours, over say next 3 years, 5 years? What is the outlook? How much do we want to scale there? And how do we see the profitability for this business as we scale up?
So I just, in one of the previous queries, I answered that, this business probably this year will end at around 200 crores, pure brand business, yeah. And we are looking to aggressively grow this over the next 3 years, which is almost at a rate of 30-35%. So that is what our aim and objective is. And as far as margins are concerned, see, Currently, we have given a guidance of whatever 18-20% for the group at top line and bottom line. Keeping that guidance in mind, we are going to take decisions at what is the kind of investments that we want to do. But broadly speaking, see, the brand is still at a very nascent stage. We are building the brand. There's a long way to go. A lot of new geographies to be expanded in. So we will not shy away from, kind of building it further, because brand building is something which is a continuous effort. It's not that, you do it for 4 years and then you stop it. So that is going to happen. And especially in the initial years, probably one would want to put, more resources now that the brand is got established. That putting that resource will help us in the long run. So in the next couple of years at an EBITDA level, we aren't looking at a lot of, growth at EBITDA level. We are trying to drive more and more of top line. So that's the broad guidance from our side. My guess is that from the third year from now on, we'll start seeing a lot of, contribution at EBITDA level from this business. But as of now, we want to continue plowing in back whatever the brand earns into building the brand itself.
Sure. Thank you.
Thank you. Next question is from the line of Abhishek Navalgund from Nirmal Bang Equities. Please go ahead.
Hi, sir. So just one question that we have restated our numbers for FY23 also. So particularly on the tax front in FY23, there has been a downward revision in terms of effective tax rate. So the question is basically, even if we deliver on the EBITDA side in terms of 20% growth this year, because of the below EBITDA items like depreciation and interest, our earnings growth would be more or less muted this year. So just wanted some clarity on what we did in the FY23 effective tax rate after the restatement.
When restating the financials, the carried forward losses of our demerged with the FMCG division, which is amounting to almost around 45 crores, that has been set off against the parent company's profitability. Therefore, what happens is that we are already under the MAT, and due to this restating of the financials, our MAT credit has gone up by almost around 17 crores. So resulting even 23-24 as well, and 24-25 also we are likely to be under the MAT.
Sure, sir. And you said the effective tax rate going forward would be somewhere close to 12% on blended basis, right, on console level?
Yes, that's on console basis, it remains at 12%.
Sure. And on my next question is on CAPEX. So I think you have already mentioned this. So while we have spent only 2.6 billion so far in 1H, we are on track to, incur the remaining part, right? The 600-650 number which you mentioned. So we'll see acceleration in the second half there, right?
That's right. Because as far as the Indian implementation of the project is concerned, we are at the receiving end of all the equipment and likely to be completed by March 24. So as far as both the projects are concerned, we are on track, and we are definitely will reach as per the schedule to complete the projects.
Sure. And one last one from my side. What sort of outsourcing that you did in this quarter, particularly since we had this equipment breakdown? So did we outsource any quantities in the second quarter?
No, Abhishek. Very little amount here or there, just to just for some small thing, but nothing substantial, nothing like what we did last year.
Great. Thank you. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one. Next question is from the line of Jenish Karia from Antique Stock Broking. Please go ahead.
Yes, thank you so much for the follow-up. So one clarification. When we announced the India CAPEX in first quarter FY23, we had guided for a total outflow of 320 crores, which would be funded by around 200 crores of debt. Now we are saying that the CAPEX is around 400 crores funded 320 crores. So firstly, why the CAPEX amount has gone up? What has contributed to it? And why have we increased our debt mix in the CAPEX funding? So these would be the two questions.
No, if you look at it, there is no increase in our original estimation. Initially, we stated it is around 50 million at Indian operations and 50 million at Vietnam operations. And the schedule of implementation that we have planned for Indian operations are to be completed by March 24, and Vietnam operations are to be completed by mid of next financial year. Those earlier submissions are well in order.
Okay, because I was going through a transfer, so there we have 320 crores, but I'll take it offline in case there is some disconnect from my end.
Yeah.
Thank you so much.
Okay.
Thank you. Next question is from the line of Richard D'Souza from SBI Mutual Fund. Please go ahead.
Thank you. Just wanted to ask about China. Last time we believed that we were thinking of sending some consignments or having a tie-up with a local partner there. So any developments on that front?
Yeah, so we are, we have had lots of development. None on the business front as of now because it does take, it does take time to seed the market and get to the clients. There'll be a process of getting the samples right, matching the product expectations, and then of course the pricing, etc. So yes, a lot of inroads have been made. We have got connected with our local partner there. They have started work on their part. So a lot of work on the background is happening. But yeah, it will take a little bit of a time for us to see the results. Okay.
So are we tying up with a local partner who has a brand there, or how is it? Or will we?
No. They are into, they earlier were into coffee business. They're right now doing a lot of other things like, oat milk and all that. But yeah, but they have a lot of connect in the coffee industry. So that's what they will be pushing for us.
Okay. The second part is that, worldwide there is a lot of demand for specialty coffee, and I just wanted to understand how are we placed there, and specialty coffee as a percentage of our total volumes, what would it be?
So we are placed very well. We last time when we spoke, we had spoken about the mini plant and the pilot plant which was set up. For the whole purpose of developing specialty coffees, we have connected to a lot of clients across the globe. A lot of them have liked our samples, and we are in the process. Very interestingly, I can't reveal the names right now, but even in India, we have got, we did some pitches for specialty coffee, especially to the high-end coffee shops and chains. So all that work is happening. As far as the volumes are concerned, the volumes will be very low. As of now, it is less than maybe 1 or 2%. But yeah, the good thing about this segment is that once we get the first mover advantage to be the preferred supplier of specialty coffee, it helps us in the long run. And that is what has happened for us in all segments of coffee, be it freeze-dried coffee or a microground coffee or whatever, or let's say the cold brew. So all that has been, we were the ones to start it, and then over a period of time, if the market develops, you get the advantage. So a lot of work is happening. A lot of clients are being, contacted. A lot of positive feedbacks have happened. But yes, the volumes are still very low. But we are okay with that because it's more of a building phase, and we all know that even at smaller volumes, it will be very high profitably. In terms of profit, it will be high profitable business.
Okay. By when, do you have a game plan to take it to about 4 to 5% of your volumes? Or?
Yes, absolutely. Absolutely. We are kind of wanting to hit those numbers. And over a period of time, we will see that we will get to that numbers because a lot of background, we've contacted many people, and they all have liked the product and they're all excited about it. And the good part is it's not just concentrated to one geography, but also it's kind of spread out, and we are getting inquiries from across. So we are very hopeful that this will do well for us.
Okay. And just a question on this. On innovation front, the last time we heard was about cold brew, and after that, has there been any further innovation which you could talk about then?
Yeah. So specialty coffees, as we are talking about it. That's an innovation that is happening because to deliver that profile of specialty coffee in instant coffee itself was challenging because most of the specialty coffee was supposed to be coming from either RNG or roasted beans. But the fact that we have been able to create a product profile which gives is very almost identical to a freshly brewed coffee is itself a pretty big innovation, and that's the reason why clients across have been very excited about it. And the best part is the coffee chain clients being excited tells you that we have been able to come very close to what all of them wanted. So I think that's an innovation that we are very keenly looking forward to.
Okay. One more question from me on the brands which we acquired in UK. Could you share any quarterly numbers for that?
No, so I think what happened. We acquired it in the month of first quarter actually, and since then last quarter was a lot about transitioning. You know how complicated things are when you're transitioning things from one company to other, and especially the kind of complexity that it involved in the sense of supplier and then all the chains to be transitioned. So a lot of groundwork has happened. So not much to share when it comes to numbers, but at an annual level we probably will reach around 12 to 15 crores of sales. But that is okay. We are looking to relaunch the product with new product formulations, with new packaging, with new positioning. So a lot of that work is happening, and probably this year is not the year when we will be talking a lot of numbers, but more on the new strategy and how do we want to take it forward. And it's only from the next year we'll start kind of drive this aggressively. Once our whole strategy is clear, our whole go-to-market components are in place, and that's when we will try and start driving.
Okay. Sorry, one last question. Reverting back to the China angle, by when do you think you will have some good news to report there? Or you would have formalized your plans?
We are hoping, we are also eagerly hoping to start listening to good news from that segment. But, as and when we start getting some firm commitments from that side, we'll keep all of you informed.
Okay. Thank you, sir, and all the best. Yeah.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
So, thank you everyone for joining us. Wishing all of you a very, happy festivities. And we look forward to meet you again next quarter. And thank you, Antique, for arranging this call.
Thank you very much. On behalf of Antique Stock Broking, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.